Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Monday, the 28th day of July, 2014, and this is the daily report for gold and silver. We do have a mixed bag in the precious metals markets with gold and silver trading lower on the day, platinum and palladium trading higher. To gold, as you can see, current print on the screen, 1305.14. Puts it off roughly $3.50 on the day. The low is above 1301.30, and the high 1310.20. Silver also trading lower on the day. Low 2042 according to Kitco, high 2080. Current print on the screen 2061. More on silver towards the end of the show. If you recall from Friday's show, we were talking about the possibility that we have in fact seen some sort of a bottom in terms of pricing in both gold and silver. Now today we do have lower pricing, slightly lower. We also have the market set for an FOMC meeting that will begin tomorrow, take 2 days. So I believe most traders are fairly guarded right now. But we were taking a look at a potential Elliott wave count, which would show the possibility that we had culminated our C wave. Now, here's the key. We talked about the fact on Friday that the pattern that we got, it was a simple 2-day pattern, simply called an engulfing bullish. And that's this particular 2 days right in here. We also talked about the fact that to take that call, we would need to see today's market, and we're certainly not going to get that, be a higher closing day, meaning a green candle with a higher high and a higher low. Obviously didn't get that, and also the reason for not putting out any kind of a trade alert this morning as we watch this market trade. And so what we're really looking at this point, and I've brought up a daily chart, but this just has a basic Elliott wave count in there. The way that I look at it is we had something like a 1. This was a perfect 61% retracement. That was our 2. This was our long 3 to our 4, and then a 5th wave up. From that, we got some sort of an A. We got the B, and the B fell right into alignment. Although I thought it was going to go higher than that, it really did come to the 50% mark and then made a lower low on Thursday of last week, this being Friday. We had it recover, and then a tremendous rally ensued just prior to the closing of trading on Friday. The question is, will this low hold, meaning 1291? Because if you get an ABC with equal, where the A and the C wave are equal, it's simply called a flat. But a standard retracement in terms of an ABC type pattern is something like this. You get your A, you get your B, and then the C makes a lower low. And although we made a lower low, it's more of a dramatic low, and you would look for it to test as low as 1280, 1281, and that of course is based upon the 61% retracement. The 61% retracement is a retracement of this entire rally. These marks here are from this corrective action here. Now, as you can see, I've added a thick horizontal line. This horizontal line falls just below these low, not these lows, but the sensation of these bodies right in here, the close here, the open, the close here, and the open. And really the reason for doing that is to kind of take a look historically to see what action, if any, happened around this price point. And the only real evidence that we have is that we had a real clustering of prices right in here, but certainly above it and below it, you had these small bodies that fell right in here, and that was just prior to a dramatic fall in price, if that's going to be any indication. I think that there is the opportunity for us to see this bottom hold water and become the low in which we would see this market trade off of it. The good news is, especially for gold bulls, that upon some technical confirmation that we have in fact gotten to the bottom, this bottom is held, we have terminated our ABC corrective wave action, we should then go into another impulse wave, and that impulse wave could easily and dramatically propel this market $100 higher. $100 higher would take us really well above this 1345, and this is the top that we have to take out for us to be able to assume that we're on some sort of an upward track in the most elemental and the most simplest form of technical analysis. When we look at a market that's trending higher, it's characterized by a series of lows that are higher and highs that are higher. So when you have a market that is stair-stepping up, even with a rally, correction, and rally, the predominant factor is the fact that we will get a higher low, which we've gotten, and now that would be compared to this low here at 1241, and the low prior to that, of course, was around 1180, and now we have to see, are we going to get higher highs, and realize that we are going to have to count this, because the low that I'm talking about at 1180 took the market all the way up to 1391. So you would need to take out this particular high to really have the technical evidence needed to really say, without a question of a doubt, that we are back in a upward momentum and an upward rally in the market. Right now, the real question is whether or not we will see this market hold these most recent lows. Because my sense is that whether or not these are the lows or we have one more move down to match these lows at around 1280, at that point we will see a resumption of a impulse wave, and the resumption will take hold to higher pricing. Now, I also believe that we're looking at a similar scenario in silver when we look at it. We've got that same rally that began really the beginning of June, takes you up to 2160. We come back down to hit this low at around 2010. That is a 50% retracement of the move up. And the question is, have we really finished this wave 2 type pattern, this A, B, C type pattern, or are there going to take one more play? If in fact we did take a play for lower lows, just as in gold we looked at the 50%, 61 being below it, what we would be looking at would be a corresponding number to that 1293 low that corresponds to this 50% here. And in terms of the 1280 area, that would correspond to 1935 per ounce, 1976 per ounce, which would be a 61% retracement. This is Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.